Divergence. Right, your homework from me was to build a divergence system with what I thought was the finest of all oscillators if you are going to build a divergence system. How did you all go? Okay, that's all I need. Thanks everyone. That's great feedback. So obviously what you're looking for in a divergence, I'll just remind you all of what a divergence is. I don't want to spend too much time on it because we've been there, we've discussed it. We need to move on. But I'll just quickly remind you all of what it is. So here, for example, I have a high in price. Here I have lower highs on my indicators, giving me a short on that one. Just make room for my short here, and dropping away like so from there. And that one is occurring at 1. That's on the Euro Japan. That's on the hourly. And we've got the TRIX down the bottom. I've turned it on in orange. I'll quickly show you my system. Each week I show you one I built. I built this one today out of interest. This week I choose I alternate each week rather than show you both types each week. So I could show you a noise or a market move system. This week I'm up to a market move system. Next week I might show you both next week actually, because I want to show you a market move system next week. But I'll try and build a noise system for those who are interested. Can I just get who is interested in noise systems, who regardless of what I say you still like them and you still want to trade them? Can I have a yes in chat box if you are, just so I know how to tailor it and how much time to spend on writing one of those each week as well. Interested in both? Okay, I respect that. Most of you know what a noise system is. A noise system is just something that picks up on the finer fluctuations. You might have it on a 15-minute chart or something. You're in and you're out in 5, 10, 15 minutes. And the maximum you can sort of build a system like that works is about 7 months, maybe 9 months if you're really pushing it. Okay, that's a noise system. It's just the vibrations of the market. And then what a market move system is if it's on, say, hourly and you can prove that it works for the last 3 years, you get a lot less signals, maybe one a month instead of one a night, but it's getting a really decent move, and it doesn't change overnight. It just slowly, ever so slightly, starts to change the way it works. So it's very easy to adapt with it. What I see is everyone is just as interested in the noise systems, just because of the more frequency in trading. So no problem at all. I'll continue to discuss both. As you know, I spent, I think it was last week or the week before, till I was black in the blue in the face trying to talk you out of them, but I respect both. I've actually got a particular project on, there's a new study at noise systems and using them in a certain way, so I'll tell you how I get on with that. I'm looking forward to sharing that with you. Okay, so here what I've got is Euro Japan 60-minute chart. The indicator I use is the one that we discussed last week, TRIX set at 5. I've got a 90 pip profit, 65 pip stop. If you're using your gain 10th pip counts, it'll be 900 and 650. What I'm looking for, there's not many rules, there's only 2 rules really. Price difference between the zeros needs to be between 40 and 90 pips. Okay, someone let me know if you don't know what I mean by that. But just the 2 significant price points of the zero. Okay, no worries, I'll discuss what the zero candles are. Okay, so a zero would be, sorry for all my drawings, a zero is going to be that candle and that candle there. And why they're zeros is because they're lining up with, can't straighten this one out, with the significant turning points. Sorry, I can't straighten that one out, of the indicator below. Now, I'm taking shorts only. The difference, the price difference between those zeros, I want between 40 and 90 pips. So I want there to be a decent difference. I want there to actually be a difference, but I don't want it to be over the top type different. I'm taking shorts only through the period I tested. I'm taking them 24 hours a day, except nothing after 7 PM to midnight. And that's all the rules. Okay, let's discuss how this went. This one here was from 2007 to now. It's exactly 2 years. I deliberately built this system with a few extra noise components in it. I actually built one that was, in my opinion, to the point of perfection, but I want you guys to learn a little bit as well from some of this stuff. So I chose this one. I can show you the profit line next week of the other one if you're interested. Okay, there's a few lessons to learn from this guy. You'll notice it's running at 58% success, so it's not much success really. But remember that my profit is, I'd call it close enough to 60%, 58.1. We'll call it 60%, but I've got a 90 pip profit, 45 pip stop. So even if it was 50-50, I'm jumping forwards. You can see, where is it? Largest winning trade $90, largest losing trade $65. So what I'm doing is I'm jumping forwards $90, back 65, forward $90, back 65. But then because it's about 60%, it's just slightly more wins and loses. Only slightly, but it is. But if you crunch the numbers, this makes it really clear. Overall, we made about $2,000 over the time. Keep in mind we're making or losing $90 or minus 65. But this is the real, to put your head into perspective on if the system's useful or not, this is the best way to look at it. The overall loss we handed back, 2,300. The overall profits, not including the losses, was 4,500. So we're making twice as much as we're losing. So we've got the 90 and 65, and then if you factor in the 60% success, trying to get your head around that, you can't quite, you see you're winning more times than losing, but if you look at these numbers up the top here, these top three, what that says is you're actually making twice as much as you're losing. So you're making $2 for every $1 you lose overall, and that's a really good way of seeing it. Signal count, I was quite happy with that overall, and number of maximum consistent losers was 5, and I've decided to leave that in there. So that's my example. I always like to give you an example each week. So I always like to give you a working example, one that is something that you can stick your head up and be proud about. But I do, of course, want you to build your own. That's why I'm not going to, not every week, going to try and pull out the very best profit line I can. But if someone's curious about how good of a profit line I can produce, sometimes I will, if you want on a side, show you what's possible if you want to see that as well. Now, the next thing I want to show you is your homework for next week. First of all, did everyone see the system I was showing the general public? Were you curious to see how I did that and what the indicators were? Yeah. It's hilarious. I built that because I thought, okay, the general public always wants to see a system one way or the other. They don't want to hear theory, they don't want to hear psychology, all that type of thing. So I today just quickly put something together, but I was so pleased with it, I thought, well, I'll show it to them, but I'm not going to show them the settings. I'll keep that for you guys because it's just too good. It's so simple, it's hilarious. If you go into your indicators, and I want you to scroll down. Actually, I'll get rid of mine and build them again. Hold on. So I'll just remove them. Okay, so everyone bring up indicators. I want you to go down until you get to nBars down. So go down to N for Nelly. nBars down, say new. Leave all the settings as is, but change your width to 6. And then apply it, but just keep your screen up. Then go down to nBars up and say new, and width to 6 as well. Now there's one final detail you need to do, is it's going to put it in panel 3. You need to put it in panel 2, so they're both on the same panel. That's just the only little secret ingredient there. And apply, so they're both on the same. Okay, I want everyone to see these settings. Take a screenshot. If you're too slow and you can't capture it all, or you're lagging behind, take a screenshot. The e-course tells you how to take a screenshot. So I'm pressing OK and I'm shrinking it down. Now what's hilarious about this indicator is it's looking, the n number up and n number down is set at 3 and 3. So what it's looking at, wait for it, you'll laugh, is 3 green candles or 3 red candles. And then it's drawing us a line. That's all it's doing. Now it's looking for a few things to do with them. It's also making sure that it's what's called a bar down. I don't know what they're defining by that really, but they want a lower high and a lower low as well, because it's, if you think about how the candles form, it is possible to have 3 red or 3 green in a row and not necessarily, because of how the wicks form, not necessarily have high highs and high lows falling correctly. So there we are, we have an indicator that's looking for 3 reds or 3 greens. So on the hourly it's just looking for 3 hours up or 3 hours where the market's been going down, and because you know that the FX market is like a loaded spring, it'll just yo-yo one way and then it's like an elastic band that's just stretched too far that way and it'll want to stretch back the other way. And so it's simply that principle. And then you can vary that and make it 4 or 5 candles that it looks at, and you can make it so it's not so picky with its high highs and high lows, and includes more, and then you'll get more bars. But very simply I just threw that together this afternoon, and when it catches one of these moves, it captures it stunningly well, which I'm sure you saw. Did anyone miss the public session and just want me to explain again how to use this, or where you get in, or did everyone catch it? If you want me to explain, just type explain. Whatever colour is down the bottom, do the opposite of it once the colour disappears. So here I have red down the bottom, so I have to wait for the next candle to completely conclude, and I observe down the bottom of the next candle that has just completely concluded that we've gone back to white, so I say the colour has disappeared. So then I do the opposite. So because it was red just there, I go long. Okay, so I intend to benefit from a rising market, so I enter there and head on up. So here's an example where I go short. It was green, green, and then it just went back to white. So I would be interested to enter around at the conclusion of this one to take that move down. And they're half decent moves. Again, this one here, I concluded there, so I'd be interested to take this move down. You can see I got that amount of heat from it. And this one here, take that move down. So it's green, you go short, so you're doing the opposite, you're trading against it because of the elastic band thing. Alright, so yeah, that was a little bonus. I didn't really intend to create the nBars one, but that might resonate with some of you. I think it gives you lots of trading opportunities. I mean, look at that, we're looking at like the last 2 or 3 days and there's oodles of them. So it's pretty cool. You might want to test that. Do let me know how you go if anyone goes on to build something cool with that. I don't want to know what you built, don't tell me. But if you did find that useful and build something cool out of it, excellent. I'll be really excited to hear that. Now it's time to discuss next week's homework. Now traders, remember in the past I mentioned the stool has 3 legs, and for it to have 3 legs you'd base it, you don't need it to have all 3, but you certainly wouldn't have, say, 3 oscillators, because that's 3 from the same camp. So it's like putting the 3 legs on one part of the stool. It's not going to stay up properly. Yet each system we've built so far has just been based on one indicator, and we've had fun with that, but it's just been with one indicator. So now it's time to build it with 2. Now if I have 3 AMAs, I call that one indicator because it's like a bias approach of view, that and TRIX. So we're going to now, your homework this week is to build a system with 3 moving averages and an oscillator. And I'm going to show you the particular type I want you to try and build. Okay, so I'm loading a template on my charts, and I'm loading the template that gives me the 3 moving averages. Aaron, these 3 moving averages are a 20, a 50 and a 100 simple moving average. Can't get any more basic. I'm on hourly, and I'm on Euro Japan because it's something different. It's quite traded. It's often in the sort of around the top 10, but it's just slightly off the beaten track. Okay, now I'm just wanting to add the oscillator in as well. Now the oscillator is TRIX set at 5. And I'm going to make it orange and put it down the bottom. And then I'm going to show you how I want you to use the two. Okay, again, I'm not going to say a very definitive way, because what it does is it narrows your thinking when you might even in fact have a better way than what I've mentioned from the start, and yet I will have narrowed your thinking if I mention too much. I want something to jump out at you and you start working with that. But I'll just plant the seed and mention one thing that could be pretty cool. What I'm looking for is a moving average cross, so let me just go find a really nice simple example. Alright, I'm going to go even simpler. Okay, right here the 50 has crossed, the 20 has crossed down below the 50 and returned to a sell bias, as you may know. So I've got that, and then I'm waiting for the oscillator as well to roll over and point down, and then I'm willing to go short here. Okay, because I have reason to from one camp. Now I've got the second camp, so I'm looking for a synergy effect, and then I'm happy to work with that. Now there's a way you can actually get a little bit more fancy about it than that, and that way is, let's say we are here. Okay, ignore the black one, I'm just saying the 20's crossed above the 50, the grey here, to go long. And I'm saying sort of, you know, catch that little rise there. Now I don't know why you'd want to against the overall bias, but no, don't let me say that, because in the FX market that's, you know, it springs around like a rubber band, so that's okay. But here's the interesting point. The TRIX has curled up here. Okay, but the reason why I want you to make this your homework and test it is because there's a flavor that you can work with, which is actually, no, I don't quite have it here, but what I was hoping to have is a continuation on the oscillator, a continuation type divergence type setup. So I was hoping that relative here the oscillator would be pulling right back, but price would not, it would just be moving up as normal. But as we find it, price is actually moving right back. Okay, so as you can see, we're getting layers. We've got two camps now, or two types of indicators, and we're working them together. And I don't want you to, I know that what I went into there was a little bit more advanced than normal, but keep it simple. Okay, for you it can be just the moving averages crossing in a certain way, and then you're waiting for the indicator to just curl over and point in that direction. That's simple. And if they cross and it doesn't, or it takes a few candles, like more than say 2 candles before it does, then that could be for you a filter to say, no, I'm stepping out on this one. So yeah, as simple as that. Let me just see if I can find one example that I'm talking about. Okay, yeah, I'll use this as an example. So it doesn't necessarily have to be across the MAs. I don't care what you build. I just want you to use 2 different camps for what you're building. And I'm saying using the 3 MAs because I know they're significant. If you want to use them on hourly, I think that's a great place to start. And I want you to use the TRIX. Now here I'm saying price is bouncing off the 50 MA. Right there. And I like it because the TRIX is curling upwards at that point. It's just bottomed out and turning up. Okay, but I'm particularly fascinated by this particular curl up because price has made a higher high, but the TRIX is a higher low, but the TRIX has made a lower low before curling. So that particular curl up is really, really interesting. Okay, it gives more reason for this bounce off the 50 to be a real rubber band style one. And if you wanted to sort of note for note make your homework, what I particularly have an eye for, it's that type of thing there. Okay, so that'll keep you interested. Greg, could you please spend 2 minutes talking about the monkey system and how you would apply it to trading for 1 hour a day at a specific time? Brilliant. I wanted to make a particular week a week where we build, your homework is to build monkey systems. Okay, so we'll dedicate a week to monkey systems. But for this week, off the top of my head, I'm going to go hunting for a monkey system right now for you. So with a monkey system, we choose a time of day. We can't just choose any old time of day. We need to choose a time of day that is a particular mover. So let's say, I don't know, I'm going to start at 2 in the morning just because it's the dead of the night. And so if things are turning or changing at the dead of the night, then something interesting has got to be going. So what I'll do is I'll say look at 2 in the morning, and I'm looking at 2 in the morning, and I'm going to look at every time the indicator curls up. So right down the bottom I'm looking at the TRIX 5 curling up. It's on the 2 o'clock candle here. So here it gave me that much. Well, I'll just say where it went to. So at 2 it curled up relative to the previous. Now, because it's a monkey system, I'm not going to take a trade every day. I'm only going to take it if at 2 it happened to be the concluding of the curling and the first pointing up candle on the TRIX. So 2 o'clock was the first time this one curled up. You see that? So it's the first the conclusion of the 2 o'clock hour candle was the first time that this one pointed up. Great, happy. Now I'm just going to run my cursor back through until I can find another 2 in the morning. And here we are. And it seems to have been curling up again with a pinch of salt. See, at that point there it's curling up, so therefore I don't care. But I mean, I don't know what I'm doing with my rules here, so I'm just going to go with the flow and say whenever it's curling up I'm going long. I don't at this stage care about the color of the candle. When you're building a system, guys, always start with minimum rules and just make it as simple as you possibly can, and then if you have to, apply rules one by one. I had an email from one of our traders who was really happy with the work they're producing. When I say work, I mean the systems they're building. I was really proud for them, and they said, do you think I could just add 1 or 2 more? Simple rules such as color of candle does matter, things like that, but I had a look at the stats of the system and the simplicity of it, and its strength was its simplicity, and it was actually a monkey type system, and I just said no, don't even add anything more to it, just use it as is, because otherwise when it comes time to massage it and keep it current for changing conditions, you don't know which of your filters to adjust because there's so many of them. So here we are at 2 again. This time, have we curled up? Yeah, we've curled up, but we've been curled up for 1 candle. Well, what we'll do is we'll just mark it how that went, but we'll keep in mind we'll actually just put 2 arrows here because it had been pointing up for at least 2. So now I'll go back to 2. Now it comes about, I guess, a bit because after having a little experience in what counts and what doesn't, where to look. Here at 2 it was bottoming out, but it hadn't turned yet, and it was actually at the next point that it had turned. So I'm actually going to put 2 arrows on the same, or 3 arrows on the same point, just to remember that. And I may or may not write notes about it. So already you can see I'm starting to, I mean, we've only got a sample size of 3, but it's already starting to look like there's some merit to that system. So I hope that helps. That's the general type of approach you take to that, but as I say, we'll dedicate a session to just that. And without a doubt, that can be one of that approach, the simplistic approach, can be one of the best ways to get going and just get your little account starting to grow. Yeah, that's me done. Thank you, traders. It was an absolute pleasure. I hope you enjoyed it, and I'll see you next week.